Good evening. This is the 8-hour workday with Rex Haymarket, where every crisis somehow becomes your bill and their bonus. Tonight's headline is simple: the ceasefire may be extending, but the economic damage does not care. Because even if the shooting slows down, the price shock is already moving through the system. President Trump says the United States is extending the ceasefire with Iran while talks continue. And on paper, that sounds like relief. It sounds like the kind of headline markets are supposed to love. But the actual economy is telling a different story. Oil is still elevated. Shipping through the Strait of Hormuz is still badly disrupted. And American consumers are already paying the price. This is the part people miss. A ceasefire headline is not the same thing as a repaired supply chain. It is not the same thing as restored tanker traffic. It is not the same thing as normal energy flows. Reuters reported Brent crude around $98.50 a barrel today. Reuters also reported traffic through Hormuz is still largely halted, with only a handful of ships passing through a route that normally carries about a fifth of the world's oil and gas. That is not recovery. That is the market staring at a wound and trying to guess how deep it goes. And then there is the part that hits home. According to AP, US retail sales rose 1.7% in March, the biggest jump in more than 3 years. If you only read the headline, you might think the economy is booming, but look one layer down and the picture changes fast. Gas station sales surged 15.5%. Reuters reported gasoline prices were up 24.1% in March, and oil prices were up more than 30% during the conflict. In other words, a big chunk of that strong consumer spending is not people feeling rich. It is people paying more just to keep moving. That is the trick with inflation shocks. They can make the economy look active while people are actually getting poorer. More money changes hands, but nobody feels better. You spend more to drive to work, more to stock a shelf, more to move food, more to deliver parts, more to run a business. The cash register rings louder and the country gets weaker. And that is why this story matters more than the daily market wiggle, because oil is not just another commodity. It is transport, it is food cost, it is packaging. Oil gets into everything. So when a war jams up one of the most important choke points on Earth, the damage does not stay in the Gulf. It shows up in your city, your store, your paycheck. Now the obvious question, if the ceasefire is still technically alive, why haven't prices fallen harder? Because traders are not pricing headlines. They are pricing trust. They want to know whether ships can move safely, whether insurers will cover the voyages, and whether this thing is actually over. Right now, none of that looks settled. The market is basically saying, we will believe normal when normal starts loading cargo again. And even if the shooting stopped completely tomorrow, recovery would not be instant. You still have stranded vessels and disrupted routing. The easy part is announcing peace. The hard part is rebuilding flow. So here is the real takeaway. This is actually a cost of living story. The war shock has already moved from the battlefield into the economy. And once that happens, the damage has its own timetable. That is the Rex Haymarket rule. The headline tells you when the crisis starts. The bill tells you when it becomes real. I'm Rex Haymarket, and this has been the 8-hour workday, where every temporary disruption somehow ends up permanently itemized on your receipt. Like and subscribe to clock in to the 8-hour workday. Mind the static, mind the spin, mind who profits.